Good morning. Good morning, students, to one more class of audit. And as we discussed and closed on the day before yesterday, we said that we will continue with risk assessment. And today we'll start with the auditing standard, covering the risk assessment SA 315, which I believe you have gone through in detail in inter, but still we will just cover in a summarized format so that we can go to some other auditing standards which are new to you, relatively new to you. So we discussed risk assessment at length day before yesterday, and I requested you to also have a go through the essay. I'm sure you have done that. If you have question, as usual, you post your questions in the chat box. In the given location where you are supposed to give, you do that. I'll try to answer as to my best of my ability. Okay. So with that, welcome you back. A risk assessment as per SA 315, Auditing Standard 315. So these please remember, let me give you a, differentiate, because you might get confused as we go along. We discussed about internal controls day before yesterday, remember? So this is part of the risk assessment. So where we talked about the internal controls, which I said just to get you back onto the class for audit. From morning you are in the class. So to get you back here, internal controls are basically the responsibility of the management, right? Who are at the helm of the affairs, who are at the helm of the affairs, the management of the company, they are responsible for the internal controls, all right? Auditors are, our responsibility is to identify based on the risks. Why should we identify controls? Only because there are risks. So our responsibility starts with risk assessment, okay? So we had been talking about risk assessment, for quite some time now. So SA 315 talks about the auditor's responsibility, what an auditor should do to identify if risks have been identified. If not, we should be identifying the risk. Please remember, for your exam purpose in the MCQ or theoretical question, please remember, it is not necessary that management will be able to identify all the risks. Not possible. Okay. But it is our responsibility to identify those risks and notify it to the management and to of course find out whether there are controls or not, which we will see today. We will learn today, and through a governing auditing standard 330. So with that, please remember the internal controls that we talked about, and where we were talking about risk assessment and controls, those are part of the management's responsibility. All right. So you need to know about that. Now we are coming to our responsibility, the auditor's responsibility. All right. So here also we have to do a risk assessment. So we cannot, as I kept on saying, that representation is not enough. Management representation is not enough. We have to use our own judgment, knowledge and experience, right? So we do the risk assessment. We cannot, and we will prepare our audit plan and things like that before we actually execute the audit. So that comes much later. So this risk assessment is as per the auditing standard, which an auditor is supposed to do. And it is really mandatory that we do, because if you remember, we had been discussing the auditing, the reports, and we have separate class on reports also again, where that the auditor has to state that we have followed the auditing standards. So it is you are giving kind of a representation here to the stakeholders. An auditor is giving a representation to the stakeholders that they have gone by the requirements of auditing standard. So it is important for us to know that and actually put it in practice. So what SA 315 talks about? It states that the auditor shall perform risk assessment procedures. All right. So auditor has to perform risk assessment procedures to provide a basis for the identification and assessment of risk. Again, as I said, the bifurcation of the risk assessment, we have to identify and then do a risk assessment. Okay, you will see that we will be overlapping, which we have already discussed. I'm just bringing you to the perspective of each requirement, SA 315, but most of the things I have already discussed and you already are aware of. Just bringing you to the perspective of SA 315 for your exam purpose, to provide a basis for the identification and assessment of risks. of material misstatement. Never to forget that. Never ever to forget that. Which are of material misstatement at the financial statement and assertions level. Assertion level, you remember, assertion is basically a confidence, that, these things are correct. And what type of assertions? There are completeness, accuracy, cutoff, valuation, rights and obligations, disclosure. These are the various assertions. So keeping that in mind, we need to identify that we need to identify the risk and we have to assess them, all right, on the transactions, on the account balance, on the reporting. Okay, these things you keep in mind. This way you remember. All right, it will be easier. Okay, and again, as I said, you don't have to mug it up. So, and there is, as you know, SA 315 talks about certain requirements and the details are given in the application. So we will not go into the detail of application. So you are quite aware of it. If you have any specific question, those who have come, those who are ready, have read it recently. So if you have any specific question, I'll answer to that. But I will keep on talking about the requirements in detail only. Okay, but remember, and question will not come, what is the application number and all. That will not come, so it is not, it will not come. So it is not mandatory that you need to remember the number. So number is just for your understanding, for easy reference to read it. That's all. Okay, I have given you the number here only to read it. Okay, and kind of an index. It's an index. So risk assessment, basically, this is defined in detail in the A1 to A5. All right. So keep that in mind. And okay, so here we will be talking about which kind of risk. Business risks, internal controls. Business risks are the risks which are inherent to the business. Probably we need to assess that. You remember we discussed that, So business risk. A business is such that there is an inherent problem. The business is completely dependent on examples. Business is completely dependent on, it is an export-oriented business, and not only export, it is exporting to a particular, country. Okay, so say to China only. So that is itself is a risk, and auditor has to identify, even if the management fails to identify it. All right. So that's very important. And business risk, the internal controls. Yes, we have to review the internal controls that are in place to get the credit of it. So we should not start inventing the wheel. We will take into consideration the internal controls. System in place doesn't mean the internal control. You remember, effective and efficient operation. That's internal control, that the operation should be effective and efficient. When it is not effective and efficient, if the reports are getting generated, again, one of the examples, reports are getting generated, but they are not used by the people who are supposed to use it, then what is the point of having such, report? So in that case, though the control is there, it is not effective and efficient. Please remember, all right? Effective, if it is not efficient, it is not going. Management is not looking into it. Ineffective means they are looking into it, but much later. The report is supposed to go by 4th of the next month, MIS report, but it is actually getting delivered only on the 5th of the next month. By that time, so many things can happen. So it's not really effective. All right. So keep that in mind. A question, tricky question situation may come for your MCQ. So having internal controls are not good enough only. They should be operating effectively and efficiently. This is one of such examples. Okay. We should observe whether, by asking questions. You cannot sit in the client's, probably a management's computer to see if he's getting it or not. We will ask questions, and I'm sure on the basis of the answer that they provide, an auditor is supposed to make a judgment. Okay. And of course, as I said, entities, premises and facilities can be, take a tour. An auditor generally takes a tour of the plant to see. It's very important to take a tour of the plant. Auditor many a times I've seen the auditor has visited a factory but has never gone to the factory shop. Why? It is important. That's an observation. Okay, an inspection. How stocks are. They say that stocks are. I gave you example. This also again reiterating. Goods are coming in from the gate. They say the way bridge is integrated with the main system, ERP system. Now one has to, are you going to take it by the word of the mouth, what he is saying? Won't you go yourself? The auditor should go himself and see whether actually it's integrated. And these are small things which go a long way in doing, identifying or doing a risk assessment. And many times we have seen that actually it is not integrated. So I'm not trying to say that they are lying, but their understanding of integration is different from what we are talking about. We are talking about whether the data is seamlessly moving from the wave bridge to the system. There we see there is a manual intervention. Attendance reporting, biometric. Biometric is a separate device and it is supported by a separate software. Payroll is a separate system. So are they moving automatically? These can be identified, this we can find out through observation, inspection, and things like that. Okay, inquiries, of course, inquiries. Keep that in mind. And okay, so prior period also in this observation and in inspection, we also look into the information that we obtained in prior period, whether they are still relevant or not. All right. So use of information, no, not the observation and inspection, sorry. In case of the use of information of the prior period information. So if we have observed something which we have noted, so it is, and it's an issue, it is a low risk. Remember, I was talking to you about low risk. Low risk are not on the highest priority, right? High risk and medium risk are the highest priority. But doesn't mean that we will ignore the low category risk simply because if they are not addressed, it will become a medium to high risk. So the next, they said that and we have given them a report, and the management committed that yes, this will be taken care of. So next year when you go, so we must follow it up on those risks also, medium to low risk, which they said that it will be addressed. And of course the high risk, as I told you, that if it is done, if it involves automation, it cannot be done overnight. So it takes its time. So the next period when an auditor goes, and these should be documented in the last previous quarter or previous period as a follow-up point for the next year. So that those should be taken up. And do you understand? Do you now appreciate that why documentation is important? One cannot remember and doesn't have to remember. We don't have to remember this. Because people may change, the partner may change, and because rotations are important, which our guidelines say that rotation should be there. Suppose the partner rotation has happened after 7 years. Now a new partner has joined in. So unless and until he is aware of what are the things which are pending since the last audit period, justice cannot be done, and we are actually not doing the risk assessment correctly, which might give rise to a material misstatement, and that will be a detection risk. Okay, keep that in mind. Okay, so engagement partner to discuss. So please remember, the engagement partner should discuss with the engagement team. Okay, regarding the the way the audit will be happening. So to gain a better understanding and belongingness, of course. They should understand, because the work will be done by the team partner, team managers, team members, and not by the partner really. The groundwork, all the detailed work will be done by the team members. So they should be taken into the team, confidence immediately by giving out the information that they should know for their good execution, effective execution of the work. Okay. So those are important to keep in mind. Okay. The required understanding. So that is the risk assessment procedure we will do. Now, a little more detail. The required understanding of the entity and its environment. Okay. So we are now going into the detailed part of the entity and its environment. We have discussed this at length. The control environment. So what business they are doing, who are the people, regulatory factors, the government policies and procedures. When we are talking of regulatory factors, we are also taking into consideration our, other countries' law and regulations with which we might have any business association in terms of whether they are customer or a vendor or otherwise. Okay, those kind of things must be taken into consideration when we are talking about the entity and its environment. So entity is the company, in normal terms, it's basically a company, but for better word, it should be always an entity. You must write entity when you're writing theory for your exam purpose, but it means the company. Okay. And environment. When we are talking of the environment, we are basically talking of the environment in which the entity is functioning. Okay. Keep that in mind. There could be, just remember, there could be internal factors, external factors also. Okay. Internal factors, external factors, and there will be inherent, here we are talking of the inherent risks that the business may happen because of internal factors or external factor. Okay. External factor, economic conditions, interest rate, bank interest rate, and things like that, on which the entity will not have any control over. Okay. People, you must keep in mind, I have told you, classes of transactions. Always, where we do, what understanding is required? It is the class of transactions, account balances, and the disclosure. Please keep that in mind. So when we are talking about what we need to understand, not only the entity, so once the entity and the control environment or the environment has been understood by the audit team, we need to go into the detail of the transactions, transaction level, account balances. When we are talking of transaction makes the account balances, right? So one should not only start with the account balances like trial balance, which gives you the account balances. No, we need to know how these account balances have been derived, right? For purchase, would there be an account balance? It might be a derived figure for the disclosure purpose, right? But we need to know how are they derived, and we had been talking about the internal controls relating to the purchase. Sales is an account balance which is forming part of the disclosed in as revenue. But how? So you are not only attesting that, but you also need to know the underlying transactions that give rise to these account balances. How would you know that many of the, some of the transactions comprised in that account balance is not fictitious? You may not know. And I gave you example for the year end, they might have to, because they have not achieved the target. There are, various ratios will be haywire. So they need to put in some transactions to show a better result. It is possible. Window dressing can be done. So how, as an auditor, you would not know? So we need to know the account balances and how are they derived through knowing the details of the classes of transactions, that and disclosure. Disclosure should be as per the relevant applicable law of the country, and wherever you are reporting, if it is reported for the country, it is to be as per our country's requirement. If it is reported for, the company is also listed. Any say Indian company, an Indian company is also listed in US. So the disclosure has to be as per that that country's requirement also. All right. So one has to keep that in mind. Disclosure to be expected in the financial statements, depending upon the legal framework for which the disclosure is being made, and that's what the auditor is signing. So it's very important. So several details are there. I may not have to go through it. We have discussed this. Complex structure could be there. Complex structure of, joint ventures, subsidiaries and things like that will be there. And transactions between them, the related parties. So those have to be taken into consideration. Ownership could be very complex in nature. And so those kind of things one has to go into in detail. Okay. The revenue resources that I said, the source of the revenue, products and services, the markets, so all these things, including electronic commerce as internal sales and marketing activities. Now here we have to also consider, when the moment we are doing business on internet, we have to take into consideration various laws and regulations which are not necessarily related to India only, but other countries also. Somebody is buying from Europe. Somebody is buying a material, a product online from Europe, from an Indian company. Okay, say now the puja is coming, the festival season is coming. So somebody may log in to an Indian site to buy, traditional dresses, and they are actually in Europe. It is from Europe. So, the data which will be transmitted. So there are certain rules and regulations governed by the European authority, and the entity here who's actually selling, they have to comply it with. They must comply with such rules and regulations. Okay, so those kind of things one has to keep in mind when we are talking about this, entity, environment, and classes of transactions. Because the moment you have the class of transactions divided, as I showed you the flowchart day before yesterday, you have to come from macro to micro. Why I said, unless and until you create a macro level flowchart, you do not know what kind of details are required. So one should not start with the detail. A macro understanding is very important, then go into the detail. The sale. Say, for example, sale. We were talking about the sale there. So what kind of sale we are talking? We were talking of sales order taken over phone. So is it coming from abroad at the phone call, or it is an export order, or an domestic order? Whole lot of things. The moment it's an export order, can we take it over phone? Are the laws and regulations being complied with? Whole lot of things come into play. All right. So that's the reason why we need to have the classes of transactions to be identified, to understand. The auditor need to understand. Okay. And of course, from the purchase, any account balances trial, you can think of it. All right. Geographical where there is any geographical dispersion, like in internet, there won't be any geography. All right. So anybody can do any business with the entity. And industry segmentation, segment reporting are important in our, legal framework. So whether those segments are identified, and many cases segment reporting is not, are exempted, like say for defense, it is for the security of the, country. That's not required. So those kind of things one has to keep in mind. That segment reporting will be done, and we have to identify what kind of segment, so that that particular segment is not doing good business. The profit is being utilized by the non-profitable segment. So these are also, so what the company is doing, but the expenses is happening. Are the management aware of it? Many times it may so happen that the top management may not be aware of it, because the kind of MIS that's going, it is questionable. All right. So that's the reason we say that one has to also understand, an auditor has to understand under what circumstances or through which system, these reports are getting generated. Okay. The customers, the key customers, the vendors, these kind of things also we need to understand, because they're, whether they are credit worthy or not. If you find one of the customers is, is a willful defaulter, it is a known. Cases are going, it is nothing, you didn't have to Google it really. It is known that he's a willful defaulter, and this company is still having some relationship with them, or they don't have any relationship with them anymore, but their balances are lying. So one has to take into consideration whether that should be written off or case should be filed and things like that. Writing off is not only the solution, whether what kind of, steps they are taking to recover to the extent possible. All right. Writing off is just an accounting entry, but recoverability, that's more important. Okay. Those kind of things. Research and development, what's going on, what kind of expenditure is happening in that research and development. It completely varies from the complexity of the entity in which an auditor is auditing. All right. Transaction with the related parties, as I said, because it could give rise to a lot of material misstatements. Various type of investment patterns. Investment patterns need to be seen, whether, that is as per the law, it should be within the legal framework and things like that. Okay. These are some of the things one should remember. Entity selection of and application of accounting policies. The company entity is governed by legal framework, that what kind of accounting policies should be adopted, right? Like say government company is still doing cash basis of accounting, right? Though slowly, government, countries are moving towards complete accrual basis. But in India is still very much in the doing accounting on cash basis in case of government companies. So that's an accounting policy, that it is on cash basis. Many cases I have seen myself, it's a hybrid. Some they are doing on cash basis, some they are doing it on a accrual basis. So we have to take a judgment properly before we give any negative comment. All right. So those kind of things, and that has to be within the legal framework. Okay, entity selection and application of their accounting policies. Simple thing. If somebody is a listed company and it has to follow the Ind AS, right? If it is a listed, it is not a listed company and not within the falling below the threshold, it doesn't have to. But Schedule 3 is mandatory. So whatever is disclosure is requirement as per the Schedule 3, that has to be done. I mean, there is no bypass for that. So we are really governed by the legal framework. So entities, so their selection and whether the selection has been done accordingly or correctly or not, that an auditor need to understand and comment. So that's important. The entity's objectives, strategies, and those related business risks that may result in risk of material misstatement. Okay. So again, as we discussed, mission and vision. Okay. And what kind of business risk the management is talking. So we need to talk to the management. If you identify a particular, as I said, a segment is not doing well, a business segment is not doing well, and you just, an auditor cannot say that you stop that business. We need to hear the management. Why are they continuing? I'm sure they have some reason to continue with the business. That's a business risk they are taking. That, and it is a calculated business risk which is evidenced, which is substantiated with some kind of estimations or documentation. Now on that, the auditor need to understand that, apply his judgment, and then he can comment and decide whether it is a matter of material risk or not. All right, and which may result into material misstatement. Too much of related party transactions which are not at arm's length. So so why you have to only buy from only deal with related parties. So those things need to look into, and thereby probably they are incurring losses. And how so the company might tell come out with a response that we are hand-holding them for a few years so that they can stand on their feet, and they will they are expanding their own base, and they will be probably on their feet in 1 year time, 2 years time, or whatever. Okay, so this is the business risk, the way it is being addressed by the management. Auditor need to review that and take a call whether it is really that is to be taken considered, or one has to report it. The measurement and the review of the entity's financial performance. Okay, so how are they? Anything I missed for the performance measures? So again, the performance measures basically you can say it can be an internal performance measure, it can be external performance measures also. Various MIS, various ratio calculations, ratios, and the external audit report, the internal audit report, and of course includes the MIS. Okay, that should be reviewed. That should be reviewed to find out if any scope of any material risk is there or not. So it has to be understood properly. Okay. So business objective, whether why this how an auditor should review this performance, whether these performance is actually, it is a result. Performance is nothing but a result. Okay, whether it's like a student passing or failing. Now that whole year somebody is saying that I have done a lot of reading. That you only come to know with the performance, with the result. So similarly for the company also, and now one cannot wait for 12 months to identify or to find out or see whether how they have performed. So it should be a continuous basis, so that any corrective actions, if required, it can be taken before it is it's beyond repair, right? It goes out of hand where the company cannot be revived any further. And we have seen so many such cases. Those who have done bank audit, and in those cases that because this monitoring has failed, the performances review intentionally or otherwise, the monitoring and the performance review has failed in spite of having the control. Please try to understand the control being there and not effective. They have these controls, they are using the best of the technology, but they are not reviewed, which are to be reviewed by the management. All right, by human being. Unfortunately, the computer cannot take over, replace human brain. but intentionally they were not reviewed, so performance review was not there, and hence the consequences that we get to see. So measurement should be is basically the how the entity is functioning, and they should be reviewed periodically, and not periodicity is a very open-ended term that will vary from organization to organization depending upon the complexity and the requirement. Okay, it should not be like once a year. It shouldn't be once a year. That's the reason why you have MIS, internal reporting. Statutory report, you see the listed company, they have to do limited review every quarter. That's that's the performance monitoring, quarter on quarter basis. All right. But internally they close accounts monthly. They do monthly closing, and MIS reports go back to the board within a week's time after the closing of the previous month. So internally they're measuring the performance on a month-to-month basis, and legal framework in our country says that quarterly it will be reviewed by the stakeholders. So keep that in mind, please, for your exam purpose. Okay. And suppose naturally there is an unexpected result in some quarter, some month, it has to be auditor goes as we are doing a post-mortem job, isn't it? So suppose you see these monthly MIS, many companies, they do not want to share the MIS report with the statutory auditor. And you see, then we tell them that it is our right, right to get the MIS report. So you cannot say that we won't give you. It is our right to have the access to such books and records as maintained. So once probably during the review, you see that in one of the months the result is unexpected. And then we have to find out what management did about it. Did they take any action? Did they review it, or they just waited? So whatever they did. But auditors should understand and take a call. All right? Keep that in mind. Okay. Auditor shall obtain understanding of the internal control relevant to the audit. I told you about this. Keep this in mind. We have discussed a lot. I'm not going into this again. Nature and extent of understanding the relevant controls. So here we are talking of the internal controls. We did we did a risk assessment. We understood the the entity's control environment and things like that. Now we are actually, and based on that, we are identified the risk, did the risk assessment, and now we are going into the internal control. You remember that COSO framework? You may open your COSO framework. That cube. If you open that, you will understand that now we are into the controls, the entity's controls, which is the control activities, the third one in the first dimension. So control environment, risk assessment, and then the control activities, which is part of the internal control. Okay, the entire thing is internal control, but control activities are now what we are talking about. Should obtain an understanding of the internal control relevant to the audit. Okay, relevant to the audit means financial statement. Okay, not anything beyond that. Nature and extent of understanding of the relevant controls that had been implemented by the management to mitigate the risks, and of course again the control environment in which they are working. Okay, and entities risk assessment on that. Control surrounding journal entries, including non-standard journal entries used to record non-recurring, unusual transactions and adjustments, year-end transactions. Here are the cases which can give rise to some material risk and misstatement, and then it can become a misstatement. So one has to be very careful, and auditor needs to be very careful about that. External communication with the regulators, such as with the regulatory authorities and things like that. If you have any specific question on this, you can ask me. All right. Otherwise, I will leave this and go ahead. Okay. Let me see if you have any question. It's almost an hour now. No question. Till now, no question. No problem. Oh, oops. I just logged out. Sorry. Just a minute. Just give me 1 minute. I just accidentally logged out of the ACPL live. Yeah, I'm back. Okay. Control activities relevant to the audit. Okay. Risks arising from the information technology. One has to look into this in detail. Okay, what are the risks that are arriving from the information technology? We should not keep in mind that, everything is hunky-dory, like so keep that in mind. It has to be reviewed because the system, the controls that are running, that's being implemented automatically through the system, they are actually information technology based systems, right? So, good morning, ma'am. The Devi, since they attending morning class. Devi, I think this institute can answer. I can't answer you really. I'm sure it will be available. It will be available. Okay. I think all of you are really tired from the morning. And so, okay, hang on there. And so control activities that are relevant to the audit are reviewed by the auditor to see what kind of controls have been implemented to mitigate the risk that has been assessed and the risks arising out of the IT. I'll just give you a little bit of examples. Maybe, whether adequate backup systems are there. There are engineers, there are the who are manning the data center. It is just think of let's take the example of a core banking to make it simple. It's a bank. It's also a banking company. So the bank is having a data center from which the core banking is functioning, right? Is using. Users are using the data center where the core banking is implemented. Now, all the IT controls should be actually implemented in and around the data centers to ensure that the availability of the system to the user on an ongoing basis, 24/7, 365 days a year. Because banking has become continuous online today. It's not that within that time only we will go to the bank teller to withdraw money or deposit money. No, it's not like that. Okay, you can do internet banking at any point of time. IMPS is there at any point of time. You can do that. What does that mean? The system should be available. The banking system should be available. So don't you think there should be good amount of IT controls, information technology controls to support such availability? Okay, so to make the system available to the users throughout the year on 24/7, IT control should be there. So an auditor need to review it. Otherwise, you cannot have the auditor is doing not doing the risk assessment correctly. All right. He's basically talking about the only account balances and transactions and the disclosure. But as I said, one has to go into the source. Where are these getting generated from? And who's giving the support? We need to review into that. You may say that how they are relevant for the financial statements. Financial statements are getting generated from the system. So if the system is not available, if the server is not taken care of, the server may not work tomorrow. So can you get the system up and running? Can the users use it? Can the auditors use it? Can the board of directors use it? Can anyone use it? So do you appreciate the fact that it is so important to have adequate controls that the IT infrastructure, whether it is a server, whether it is a software, whether it is a network, okay, they are using on a continuous basis. Many times, I'm sure you have practical experience in this, that you go to the bank to do some banking business, and you get and you see that they're telling you that the link failure has happened. This is a very favorite term they used. So what do you mean by a link failure? So there is no connectivity from the bank's branch to the core banking server, which could be in any place, not in your own hometown or home city. Okay, so that link has failed. So how long you're going to wait? How long you're going to wait before the bank started losing business? That's important. Can it wait for half an hour? Or can it wait for 1 day? Can it wait for 2 days? Probably not. Okay, so just imagine a bank is not working, functioning for 2 days today. I mean, you can't think of it. All right. So that means it has hardly ever happened. Probably that means they are taking such controls, and they are operating effectively and efficiently. All right. So that the system is available on a continuous basis. So that we need to keep the risk vis-a-vis the controls, monitoring of the controls, and internal audit function, if any. If on internal audit, Jose, I don't know if my system is showing it correctly. Can somebody else can also confirm is the screen is blurred, or I don't know really. Okay. Okay, let me see if I need to tell you any specific control activities. If I need to tell you, I'll tell you here. Never forget the requirement of the objectives. That whatever control is there, it is to mitigate the risk, to address the business objectives, or to reach the business objectives. Okay, so that is the objective of any risk assessment or anything like that. Okay. Yes, not to forget, when we are talking of control activities, not to forget about remember the authorization, segregation of duties, physical controls, and information processing and things like that, which we have discussed at length. So I do not want to go into that in detail again. So you have other lectures on that. You can hear that. So that's basically we are talking about in SA 315 also. Okay. IT, yes. Yes. So when we are talking of, IT controls, please keep in mind the various, the data center, as I said, system software acquisition, implementation and maintenance. It is very, very important to see the version of the software. If they're using a very old version of a software, one has to know, an auditor has to know that it is not supported. An auditor need to know whether it is being still supported by the the original manufacturer. Say somebody is using Oracle. All right, somebody is as a database. Somebody is using, an entity is using SAP ERP, which is owned by SAP. Oracle database is owned by Oracle. The version, so Oracle is not good enough for an auditor. I mean, ignorance cannot be a bliss. If you, as an auditor, you document they're using an Oracle database. No, it's not good enough at all. You have to mention what version, what version of the Oracle is being used. And as an auditor, we have to find out whether that version of the database software is still being supported by the original manufacturer, because they give, it is a public domain, it's available. The information is on public domain, that how long any particular version is supported by the manufacturer, and then they do not support it. So any company, any entity maintaining that, it is actually a risk. So as an auditor, one has to identify that, this kind of question may come. So be careful. An integrated kind of a question may come, taking into consideration IT and also SA, the risk assessment. So you must identify that if a system is outdated, the risk is that it may not work tomorrow. If it is working fine, there is no problem. The risk is there that if it doesn't work, who's going to support it? Now, if the risk materializes, just imagine, the risk materializes, the system is not available. They pick up the phone, talk to them. They said, no, it's out of warranty. It's out of extended warranty also. We cannot give you support. So what you have to do, you have to purchase the new version and install it. Cannot be done in a day. Just imagine a bank just not doing that, and they are not having the system for 2-3 days. Can they go back to manual system? No way. So these are the risks one has to identify from the IT perspective. Okay. Program changes. One has to see why it is good always to have a packaged software, which is a purchase software, and not a software which is being developed in-house. Programs could be changed. What is the problem if the program is changed? It can give rise to manipulation, that they change it in a unauthorized manner. All right. So there are these kind of issues which we discussed when we talked about a specific, activity during chapter 4, I guess. Yes, special audit. Yes. And access control, people should be getting, users should be getting access based on their job profile, including the auditor. All right. And how the system is, even the say SAP has been implemented, or any core banking has been implemented, how they were acquired, how are they maintained, and how they are being supported. So whether they have support from the original partner, or who have developed it, those kind of things. Otherwise, if there is a problem, that cannot be addressed. Okay. And monitoring of controls, I'm sure we discussed at length again the monitoring controls, whether they are to identify that the controls are working efficiently, effectively. All right. And if there is any internal audit function. Internal audit function are mandatory in certain cases it may not be mandatory. Still, they have some, they can have. It is always good to have an internal audit function. If an internal audit function is not available, an auditor has to identify, accordingly do a risk assessment. Probably they have to increase their, plan their audit in a different way, because there is no internal control. So they know that on a month-on-month basis, a lot of things may not be, or on a quarter-on-quarter basis, a lot of things are not being reviewed and may not come to light. So that they should see. And if internal audit function is there, so they can always have a look into the internal audit report, talk to the internal audit report, or internal auditors also, whether it is an in-house auditor or an external, audit function. Okay. And the responsibilities and things like that should be reviewed. But at the end of the day, it is the primary auditor's responsibility, because he is attesting the, financial statements. So he can only use the internal auditor's report and can talk to them. That's all. Okay. So keep that in mind. Understanding of the source of information. Okay, as I kept on harping on that the source is very important. Whether it is a manual source, somebody taking the sales order over phone. So naturally, you have to have the risk assessment will be high on that, because the risk is that many of such orders may not be actually converted into sales order. People forgot, people didn't understand well. So there would be risk on assertion of completeness and accuracy. Okay, remember? So those kind of things. The source is very important. Where you are getting the data from to record it into the system. That's what, for an auditor to understand. Okay. Identifying and assessing. And when we were talking of, the source, not only the source of the transaction, the source of the report also, which I discussed. I've been passing comments I'm making, statements I'm making, that whether it is manually prepared or it is actually being derived from the system. If it is derived from the system, then again, taken into Excel and then ultimately submitted to the management, there is a possibility of a risk that the data could be manipulated knowingly or unknowingly. Many things can happen unknowingly. It is not necessary that, with an intention to do a fraud or to intention to, conceal certain things, that this is being done. It may not be so. Erroneously also that can be done. That is also a risk. Error is also a risk, right? So keep that in mind, please. Identifying and assessing the risk of material misstatement. So materiality. Okay. At the financial level, we are talking of the financial level. Nothing less and nothing more than that. Okay. So the materiality has to be so small lapses could be there. But again, here we have to assign the risk category, and then only one would know, because you must remember the account balances or accumulation of the account balances. One account balance may not give rise to a material misstatement, but many of such account balances taken together can give rise to a material misstatement or a material risk. All right. So it has to be looked into that way, that small errors, if taken together, small risks, if taken together, is it becoming a material figure? Yes. If yes, then it has to be addressed accordingly. Okay. So how this risk can happen? Because materialize because the control failed. Okay. So control failed. That's why these risk materialized. Why we had control? Because the risk is perceived. Why these risk materializes? Because the control failed. Keep this in mind logically. All right. It could be because of the management's integrity. That's the, ultimate thing. That's the reason why we were trying to do, understand and assess the management's integrity at the control environment. These kind of risk can materialize because of such kind of a non-integrity issue. And okay. And based on this, A109-113 talks about the, the material misstatement at account transaction level, account balances and disclosure. Okay. So we have to keep that in mind, and accordingly our report has to be modified. Okay. It could be a qualified report, or it could be as bad as a disclaimer. It can go up to that. Okay. Where you cannot make any opinion, give any opinion. And identify the risk throughout the process of obtaining an understanding of the entity. It is a continuous process. It is a continuous process. As we go along the audit, and if we think that no, this is not the right thing which we assessed initially, it is our responsibility to change the risk assessment and the subsequent audit process. So it is a continuous process. Please keep that in mind. It is not a one time, not a once a year phenomena. Okay, we need to change it. Process of identifying the risk of material misstatement and things like that. Okay. And there are, you please go through the appendix 1 and 2, where several examples of the conditions and event that can give rise to, risk of material statement are provided. You can go through that. So the risks that require special consideration. Unusual transactions. Some unusual transactions. Unusual transactions can give rise to I think I made a mistake here. A09 is not right. Unusual transactions. Oops, sorry. I'm just removing this. It is not A09. 123 is fine, but not from A09. I'm sorry about it. Okay. Unusual transactions. What are the various type of unusual transactions that, it can again vary from situation to situation. One has to identify that these are, unusual nature type of transaction and has to be taken into consideration, and that could happen during the year. It could happen at the year end. It could happen at the year end also. So it could be, very complex calculations, complex nature of transactions can happen. So please keep that in mind, and please keep in mind that it can happen during the entire period, at the transaction level also, at the reporting level also, and also at the account balance. So assertion remains the same and all throughout basically. Okay, unusual transaction can happen. So don't keep that in mind that unusual transaction can happen only at the year end. Okay, it can happen at any point of time. Okay. And so we also have to keep into consideration the material misstatement due to fraud, for which you have a separate essay. So that we will not discuss here, but in risk assessment, we also consider that. Okay. And then comes whether the auditor has determined that the significant risk exists. The auditor shall obtain an understanding of the entity's control, including control activities relevant to that risk. Okay. So we have to document it. One is that we have to document it, and we see that the controls, how that controls have been implemented, whether it has been approved by the management and management has approved it or not, and if it is a one of such cases, what kind of control has been there, any lawsuit or things like that, we need to consider that too. Okay. And revision, as I told you about the revision, that there is a possibility that we have not done our risk assessment correctly. At that point of time when we started the work, our risk assessment is based on certain understanding, as we understood from talking to the people, going through the documentation and things like that. But after, when we started the audit, then we see that no, things are different. So we need to revisit it and revise our risk assessment. We might have to change the audit procedure completely. We thought only the test of control would be good. Okay, but no, then we see that no, test of control is not good enough because the risk is such and the control is such that control is not working. And because the control is not working, the risk of material misstatement is very high. Please listen to me carefully, this part of it, please. Though you are aware of it, why we need to revise? That when we initially did our risk assessment, it was we identified that the risk is supported by some controls. So the audit procedure, we said, okay, we will just do the test of control and we will not go for substantive testing. But when we started checking the controls, whether they are operating or efficiently and effective, we saw that no, it is not working. We had to revise the risk assessment. Then we see that no, if the control is not working, then what is the point of having testing it? So we go back and say that no, because the controls are not working, the risk of material misstatement is high, and naturally we have to have a larger sample size for analytical procedures or test of details or both. Okay, we will have to test more transactions. Okay, we have to test more transactions, audit more transactions to arrive at the conclusion whether that transactions or account balances or the disclosure is giving rise to a material misstatement or not. Please keep this in mind. Okay, and this is a continuous process. We just cannot forget it that okay, last year to this year we have compared and we had made the changes, that's it, we should not go back. No, if something happens, we comes to a stumble block where we saw that the controls are not working, we must go back and revise our risk assessment. Okay, that's what we are talking. And many times, and the other way also, that while we were doing substantive testing, we found that no controls are there. Then stop the substantive testing and waste time. So we go back to the control and revise it and then do the test of control and finish it off. Okay, documentation. Documentation is of paramount importance. No need to say that we need to document whether through narratives, whether through, flowcharts, detailed flowcharts, identifying the risk. Please go through the other lectures where I have shown you various type of, flowcharts, how they are prepared. And those are all live cases, live scenarios I have given. And they are prepared that way, identifying the risk. And we prepare the risk control matrix. Institute have very good guidelines on RCM, based on which basically the internal financial controls over financial reporting is prepared. And so an auditor's responsibility is to review that RCM, which is risk control matrix. Risk are identified for each processes, including the information technology, controls are putting in, and basically the control lapses, whether controls have failed or not, that also is commented by the management, and it is that document or that report is given to the auditor, statutory auditor. It is the responsibility of the statutory auditor to go through it, use his judgment, skill and experience, and then decide whether he would do some more testing on it if he thinks so. If not, he would take a decision whether internal financial controls over financial reporting is good enough. So documentations are very important. So we need to keep that in mind. Okay. So starting from the risk assessment to the detail level. Okay. And we must keep copy of evidences. Okay, we must keep copy of evidences. So we have separate essay again, auditing standard and audit documentation. So I'm sure you are aware of that. So keep that in mind. So I think that would be all about the AC 315. If you have any question, I will address it. Otherwise, okay. Now it is, you can see it. Good. Otherwise, we will move on to the next chapter. So, which is basically, give me 2 minutes. I will, Joes, this is basically the application. This is basically the application. If you open any auditing standards, which may not be immediately required for your exam purpose, if the requirements are good enough, I have just given those numbers only for your understanding, in case just by looking at the requirement, if you do not understand the statement. If you do not understand the statement, just by going through the requirement, you can always go back to the detail. A103, A101, A1234, they are the detail application, and they give you explanations, that how this requirement is actually working. So you don't have to go through it right away. Okay, but in case for your exam purpose, basically knowing the requirement is good enough. But for understanding, suppose you don't understand the requirement, then please read the detailed requirement. Detailed application, which is also written in the requirement. Within bracket, it is written there. It's not that I have written it, separately. It's given there in the essay. So if you open the essay only for your exam purpose, read the requirements. Okay. And in case you don't understand any of the requirement, then only go to the application. Okay. That's for your exam purpose. Later on, you can go in detail after you pass the exam. Okay, just give me 2 minutes. I will open the other next PPT. Okay. So next chapter that we will be talking about is the audit planning, strategy, and execution. Okay, and in these we will be covering couple of auditing standards, including 330, which probably is new to you. All right, so doesn't matter. We will cover that in detail. All right, to the extent possible, we will cover that in detail. Okay. So audit planning, as per 200, SA 200, what it states, it basically states the overall objectives of the independent auditor and the conduct of an audit in accordance with the auditing standard. That don't forget that an auditor need to report that, he has to report that in the report that we have followed the auditing standards, right? So planning is absolutely important. It doesn't have to be an elaborate plan. It varies from the complexity. If it is a large company audit, yes, it has to be an elaborate plan. But if it is a small company, and probably only one partner is there, or one or two partners there, a small audit team, doesn't matter. Some audit plan must be there. If you see the bank audit, the institute gives us guidelines. These are it's kind of a checklist so that we don't forget. Planning is important so that we do not forget do's and don'ts. Don't keep everything in our head. We tend to forget. We are human beings. So we keep it in writing so that we don't forget. Okay? And naturally we do our audit effectively and efficiently. So planning is important, and planning comes before the detailed plan. So planning would include the detailed plan. So it comes before we start the audit. It starts before we start the audit. Okay, one has to understand. We allocate resources. Whole lot of things are there. We allocate resources. How would you know who would be the right resource? Unless and until we plan. Unless and until we do the risk assessment and understand the environment. How do you decide who are the team members? It's not like picking up, oh, come on, you are available, you're free, go to the audit. No, it's not like that. Okay, it shouldn't be like that. It should be much better than that. That we need to identify the right kind of resource for the audit. We may not have the resource. We have to take somebody's help. All right. So that's why the planning is important, and you cannot do that on the field, on the job. All right. That way we won't be doing our job efficiently and effectively. So it states, so SA 200 states that in order to achieve the overall objectives of the auditor, now we are talking of the objectives of the auditor, right? So to achieve that overall objective of the auditor shall use the objectives stated in the relevant essays in planning and performing the audit. All right. Without a careful plan, the overall objective of an audit may not be achieved. All right. So audit planning is necessary to conduct an effective audit in an efficient and timely manner. Not to forget the time, not only efficient time, we have to complete our audit on time, right? Otherwise, it could be, violation of our, code of ethics also. So we have to keep that in mind, So planning is important. So I hope you can see this green. The planning will vary. Of course, it will vary depending upon the size and complexity of the auditee. If the size and complexity of the organization of which audit is conducted is large, naturally elaborate, past experience should be taken into consideration. The key team members, ideally it should be, continuing team members if possible, to the extent possible. If he is not there, you cannot have him. But if he is there, effort should be made that the same team is continuing the current year also. And so because they are carrying the experiences, again, understanding is not to start from the beginning, and change in circumstances can happen, which will be easily be possible to find out in case the previous audit team is also working, but they have to be understood. All right. So planning depends on that. Planning as per the auditing standards, it is a continuous process. As I said, as the risk assessment is a continuous process, you see how they are complementing each other. Because we are changing the risk assessment, and because based on the risk assessment we did the planning, if we are changing the risk assessment, the plan will change naturally. So it has a cascading effect. They are interlinked. They're so okay. So it is a continuous process, and we cannot say that no, we will complete the job and then we will do the planning. Then this is just for the sake of making a plan. All right. So planning has to be very careful. In large audit firms, it is automated. The planning is automated. As you proceed into the audit, that has to be completed, and then only we can move forward to the next process. All right. It has gone to such level, and the more complex job, the more complex audit. All right. But less complex job, less complex plan, but plan must be there. Okay. And it talks about the responsibility of the auditor, and acceptance and continuance of client relationship and audit engagement as per SA 220 and SQC. SQC 1 has to be also taken into consideration, right? The standard quality control. Okay, those things are important. That what quality control the auditor must show in execution of their job. Which a peer reviewer would come and review. That's what we are also being reviewed. Peer reviewer reviews the auditors' files and firms detail, and then they give a report. So it is a continuous process that we keep up to the SQC and the acceptance and continuance of the client relationship as per the SA 220 and the general audit planning as per 200. Okay. Okay. So we will straight away go to the, I think we have gone, no, we have not gone to the straight away 315 will come little late. Okay. Audit planning as per the standards again, the content of the audit plan, the nature, timing, why we prepare the audit plan to decide on the nature, timing and extent of the audit that will timing, whether it will be a continuous one, interim, we will do it for 6 months now, and later on the account balances will be checked only at the period end. Okay, but during the period will we say in the month of February, the auditor will go and do some transactions audit. So timing is important. At what point of time such kind of audit will be done? The physical verification. You need to understand the words, nature, timing, and extent. All right, timing is that physical verification. When you're going to do the physical verification, they should not be given. Generally, some kind of surprise should be there in the audit. All right, they should. Otherwise, people will be prepared. And if the risk of material risk is there, that will be not there if the element of surprise is not there. They will cover it. The auditor will make the mistake by just doing that point of audit of that point of time. But during the other point of time, that control was not there. So we failed in detecting such material, error or risk. I wouldn't say error, the risk. Okay, of such controls which was not working during the other period. The control was working only when we go. That's also important. So some element of surprise should be there. Okay, some element of surprise for cash. Many a time client will ask, okay, tell me when you will do the cash verification. Why should I tell you? It's a cash verification. You should be ready all the time. You are closing the cash every day. So why do I have to tell you? I will give you that, at least that part of the account balance should be checked on a surprise basis. Okay, inventory, many a times it is not possible. But when you are taking a tour, inspection and observation, you suddenly might say, suddenly the audit planning can be there, that when you visit the factory, you just tell them, okay, I want to count the inventory, do it and see. A small portion, it doesn't have to be for all the inventory. For that, whatever the plan is given by the management, do it. But the element of surprise should be there, that, okay, can you count it? Can you count it? And let's see whether it is telling only one small component. Okay. And you may come across with startling, situation, and they are material. I'll give you a small example, again, a practical example. Labels in a manufacturing industry, a garment manufacturing industry, who are also exporting. Labels are also given by those customers, See, these are made to order in US and Europe, various, retail shops there, retail brands. So they send their labels. Labels are printed as per their requirement, and labels are printed. And those labels are very important. Those labels, if you are put into some other garment, similar garment, and they can be sold at a lesser price, you see the goodwill of that company is at stake. So they count it. If 100 quantity of order is there, only 100 labels should be ideally there, plus minus the acceptable waste. Okay. So a level of surprise, what we did, we were taking a tour of the factory, and we saw these people are stitching the label on the garment. The garment has been finished and it has come for stitching the label. So an element of surprise was there, which can we count the labels, and we counted the labels and cross-checked with the acceptable inventory as per the customer's requirement. Okay, there was no surprising result though in such a case, but this can be very well done. So that's what we are talking about. The nature, timing, and extent should be planned depending upon the risk. You see, in this case, the risk was high. For the label, you might say that it is a small, the amount is also not significant, but the risk is on the client that if it is misused, the customer will sue. That is the risk. The cost of the label is not important, but keeping control over the number of the label was very important. Okay, so that they are not misused. So those kind of things must be kept in mind, and that's what we did in SA 315. And 330, what it talks about? What 330 talks about? We have identified the risk. All right. The auditor has identified the risk. Okay. The client has identified the risk. They have controls. Nature, timing, and extent of planned further audit procedure at the assertion level as determined under Auditing Standard 330, which talks about auditor's responses to the assessed risk. Now, how do we address those audit risks? We have assessed as per SA 315 that need to be addressed. So we will, as I said, we will take into consideration the controls that's there. If the controls are missing, we will go into the detailed testing. Okay, test of details. That's basically we will see in 330 in detail it talks about. Okay, so how the risks are addressed by the auditor. For the time being, keep this in mind, and other planned audit procedures that are required to be carried out so that the engagement complies with various auditing standards. So what the plan basically looks like result of unexpected events, changes in conditions or the audit evidence obtained from the results of audit procedures. Okay, these are the situations which may result in changing the plan. As I said, so plan can change. Okay, unexpected something we encountered, unexpected transaction. All right, while doing the analytical procedure, and immediately, we saw that it might give rise to a material misstatement if adequate controls were not there. So we took that as a material risk and plan it accordingly, that we might have to test the control, and if the test of control fails, we will be having so much sample to see in detail and then take a call whether that account balance has actually given or not, whether it has actually given rise to a material misstatement. Now, so before making a plan, we must do a strategy. Okay, plan is detail, but before that, we should have a strategy. Determination of characteristics of audit. All right, and reporting objectives. Reporting objectives again guided by the legal framework. Reporting objectives auditor will not decide on their own. Okay, so guided by some kind of legal framework or other. And team effort. What should be the team effort? We need to budget it. Auditor has to budget it. Audit firm has to budget whether they have adequate professionals or not, whether their team members are good enough for the audit or not, whether they need to hire, whether they have to take somebody on a consulting basis or something like that, or how much time they have to spend. Those kind of things are part of the team effort. And preliminary work. Preliminary work is very important. The large audit firms, they start. Today this thing is also the parallel audit goes on. During a rotation, this happens. I've seen this is happening. I'm sure many of you do it also. If you're working in a firm who have large audits, mandatory rotation is taking place. So auditor is decided 1 year before the rotation, so that new auditor will start a parallel audit during the last year of the previous auditor. Suppose for 1920, the audit for the current auditor is the last year. From 2021, a new auditor will be coming in as part of the mandatory rotation, right? And the auditor is selected in 1920 only. So the new auditor who will be actually attesting for 2021, he will come on board in 1920 to do the audit. So for better understanding. Okay. So preliminary work, and it can start 1 year before. So they will not be reporting. Report will be done by the, retiring auditor only. But the new auditor can start audit, and I have seen this for listed companies happening. Okay. So that's the preliminary work, better understanding, so that they can start doing the audit, effectively and efficiently from the year, say the next year, 2021. So what kind of preliminary work it has to do? They have to decide if not to that extent that 1 year prior you start the audit, at least, 2-3 months before, generally from December, auditor starts going to do the preliminary work, especially to understand the information technology part of it, especially to understand if there is any major changes in business, major change in business operations, the way of doing business. Say for example, somebody was only doing retail business from their retail shops, but from this year they started doing the business online also. So these preliminary understanding, because the modality will be very different. It is another line completely. So the business, particular work from the retail shop vis-a-vis on internet will be so very different, and the auditor need to take into consideration such shift and changes so that they can assess the risk correctly and do the audit planning properly. So that should be part of the audit strategy. I hope it is understanding is clear. If you are very tired, don't stress yourself. Listen to me, but please post your question. Doesn't matter if we do not answer it now. We can always answer it later. But I urge to you, please, you must read it immediately and post your question if you are not understanding, because a lot of questions will come from this area. All right. So please keep that in mind. Nature and timing and extent of resources. When a resource will be required. All team members are not required, throughout the audit engagement. Experts will be required for a brief period of time, because time is money. Time is money for auditors. So when they are required, that needs to be strategized, that needs to be planned, so that that person will be utilized in some other client during when he is not required. Okay, because he is getting paid, but that needs to be recovered, right? If he is employed by the firm, his salary has to be recovered several times, okay, through the audit fees. So he should be utilized. He should not be idle at any point of time. In any audit firm, the biggest scare for us is that somebody is sitting idle. Okay, so keep that in mind. Nature, timing, and extent of the resources, that when they will be used, what kind of resources will be used, and for how long they will be used, so that we know that yes, the audit fee that is coming, that commensurates with the cost that the auditor is going to incur. All right. So that's also important. Employment of qualitative resources, quality resources are important. So you cannot use only non-performing members should not be only there. Only the student should not be only there. I'm not saying you are not quality. Quality is much better. I have seen cases where students' quality are far better than other staffs. So there has to be a mix and match, because the students may not have that experience. So matching with the experience and the quality should be important. Employment of qualitative resources. And that so that it is required. Number is important for doing basic vouching. We cannot do away with basic vouching. All right. So we need a lot of people. And if the plan is given, even a first year student can do wonder. I vouch for that for all of you, because I have seen that a good audit planning in their hand, make them understand, as part of the audit, as an audit partner, or as it audit senior in the team. If we tell the audit team properly that this is the way you are going to do the audit, and I'm giving you the plan, this is the way you should do it, the audit is executed very nicely, even by a very junior member of the team. So we have to have qualitative resources. We have to adequate number of people. Otherwise, we cannot do our objectives of the auditor cannot be met, and we'll end up in huge trouble. Timing of deployment of the resources, management of the resources. We must manage the team well. They should report to us properly. It's not that at the end of 1 month we review. When we start reviewing the file, then we see, oh my God, this is not there, that's not there. You have not checked. No, it shouldn't be like that. It should be a continuous process, at least once in 2-3 days. If not, if not in 2-3 days, at least once a week, the partner should review the file, whether an automated file or a physical file. It is important for an auditor to do it. All right. Senior member of the audit team must do it. Management of the resources. So those kind of things should be maintained. Okay. Meeting should be held, because we need to hear from the team also what kind of problems they are facing. And we need to guide the team member so that they can execute their plan properly, the audit plan properly. All right. Documentation, of course. We should document the audit plan, the strategy and the audit plan, overall strategy, the detailed audit plan, the area-wise, balance-wise, transaction-wise, disclosure-wise. So keeping assertion in mind. Our assertion is the base, that we must see none of those assertions are non-assertive, that yes, they have fulfilled that assertion, that yes, completeness is achieved, accuracy is achieved, the valuations done correctly of rights and obligations there, all the transactions are valid and authorized, disclosures are correct. These are the assertions, right? So an audit plan should be such that all these objectives or the assertions are met, and nothing should be there which can give rise to material misstatement, which can be actually a detective risk for the auditor. Risk will be there at an acceptable level. Inaccuracy can be there at an acceptable level. All right. When you are making, when I say that inaccuracy at an acceptable level, meaning you are making assumptions, of estimation. Estimation is always a judgment, right? So judgment, if the auditor finds the judgment is correct to the extent, possible, giving on that period of time, even if there is a room for inaccuracy, that is only at an acceptable level. It should not be 5% when we have assumed it goes, actually it is 50%. That is an error. That is a material misstatement. All right. So that is an acceptable inaccuracy. Acceptable completeness may not be. Completeness should be all there. Even one or two transactions should not be missed out. Unless and until it is very, very insignificant. Very, very insignificant. 10 rupees, 100 rupees. I'm just giving examples, okay? It could be 1 lakh rupees also, depending upon the materiality. All right. So please remember when we are talking about, audit plan, we must keep into mind the assertion that all the transactions have been taken into the consideration, completeness, accuracy, rights and obligations, the valuation, the disclosure, validity and authorizations, okay, on the transactions, account balances and disclosure. If this is the way you remember, you will be, I'm guaranteeing on behalf of you, you will be able to understand and answer the MCQs very, very correctly. And even you can write it also. And even if you are writing in your old language, but you are, expressing it correctly, I don't think there would be much room for any deduction of marks, okay? Changes in strategy or in plan, as I said, it must be there. The room for such plan should be there, because as we go along, if you come across some unusual cases, we must stop there, go back, do the risk assessment, change the audit, procedure that we should do, and put that into audit plan. Okay. Am I on time? No, I am not on time. I am on time. Yes, I'm very much on time. Relationship between the overall strategy and the audit plan. The audit strategy is prepared before the audit plan. Of course, the audit plan contains more details than the audit strategy. Yes, strategy and plan are interrelated. Audit strategy provides guidelines and for developing the plan. Detailed audit plan would include nature, timing, and extent of the audit procedures. So we are now making the audit program. So basically, nature of the business in which the organization is engaged. Okay. Size of the internal, and these are the things we should, keep into consideration while preparing the audit program or the plan. The system of internal control and accounting procedures, size of the organization and its management, and information as regards to organization of the business, accounting and management policies. Okay. Any explanation is required for this? It's quite, I think I have explained anyway during the course of discussion. Okay. Now comes the audit execution. Okay. I have not gone into how to draw up the audit program, which is there in your study material. So, just a bullet points I have given you to come to the audit execution. So, risk and control evaluation. So, we identified the risk. Now, we are actually test the control and evaluate whether the risk is mitigated. You might get confused. So many times we are using the word risk and controls, evaluation, assessment. That's why, it's important that you listen a little carefully. Each has having its own, area and perspective of discussion. So in this execution, what we are talking, the risk that we have perceived or we have assessed. So the controls need to be identified, which is identified. Now we need to test the control. Okay. And then evaluate. So control, when you test the control, now you have to evaluate whether it has passed, control is good or bad. Then only you will be able to, decide whether the risk is mitigated to an acceptable level. So acceptable level means that if even in spite of the control, if the material risk control fails and the risk materializes, the impact would not be material. Am I able to put this through, please? If the control fails, when you are evaluating, you see that the control has failed. If it is passed, good enough, that the risk is mitigated. What if it fails? Then you have to evaluate that if it fails, and the risk if materializes, will it give rise to a material impact? Will it have a material impact? If it is giving rise to a material impact, you have to change the procedure of audit. Then we have to see whether during the course of the period under audit, whether such, control failure had happened, which has given rise to that material impact, negative impact. We start looking for that particular transaction. Okay, that's the test of detail. That is the test of detail. Okay, so based on your evaluation, also you have to decide whether we have to increase our sample size for test of detail. So please remember, for audit purpose, it is not only test of control, it is a mix and match of test of controls and the substantive testing, which is test of detail. All right. So this is important for you to remember for answering the question. Don't get confused into that. I'll take you through that. Come here. Don't get confused. So come here. Look into this. Auditor's responses to the assessed risk. Okay, which is governed by Auditing Standard 330. Before I start, let's look into what is a substantive procedure and what is a test of control. Any question? Okay, no question. No question at all. Okay. So what is a substantive procedure? What is a substantive procedure? An audit procedure designed to detect material misstatement at the assertion level. Okay. It comprises of two things: test of detail and substantive analytical procedure. Please remember this. Okay. These are the fundamentals for a student, and this will continue till we are alive. Right. So please remember, substantive test or the test of controls. These are the two things through which we actually we identify to see that the risk that we have assessed, how they have been responded by the company, and then we decide on our reporting. Okay. Yes, I'll take a break for 5 minutes. Okay. Thank you. Okay, so please remember the procedure, timing, nature, what kind of nature, what nature of audit that will be done. So standard substantive procedure and the test of control. So what is a substantive procedure? Which is designed to detect material misstatement at the assertion level, of course at the assertion level. And substantive procedure, please remember, it includes test of details on transactions, on account balances and disclosure, and substantive analytical procedures. Now, when do you use the substantive procedure? Please listen to me carefully, dear students. Substantive procedure is used when the controls are not there. When the risk assessment and the controls, underlying controls are identified to be missing. Risks are there, but the underlying controls are missing. This is being assessed by the auditor. So straightforward, the nature of audit would be substantive procedure. Alright, there is no question of test of control simply because control is not there. Okay. And where the test of control will be done? Where the controls are there against to mitigate the risk. So please keep this in mind. For the last time probably, risks are assessed. Why would you have controls? Because risks are there. So the auditor would assess the risk and then they will find out what are the controls that the management has implemented to mitigate the risks. Right? So while doing so, while identifying so, if the auditor identifies that there is no controls to mitigate the risk at an acceptable level, they will not go for anything else but substantive testing, which could be test of details or analytical procedure, right? So that is one path for doing the audit. The next is that auditor has assessed the risk. Now they're trying to identify what are the controls to mitigate the risks, and then found that yes, there are controls which have been implemented by the management as internal controls. Then they will test and evaluate those controls. So there the procedure, audit procedure would be test of controls. And of course it will be mixed with little bit of substantive testing, mostly the analytical procedures, alright? If the controls are very good. But traditionally it is the test of control along with some substantive testing where the substantive testing is less. Okay, because controls are there and controls are working. The moment the controls, the auditor evaluates that the controls are, it is not that only the controls are working, but they're good. They're operating and effectively and efficiently. Immediately the auditor can take a judgment, decision that yes, as far as these account balances are concerned, they do not pose any risk. I'll give you an example to simplify this. Say the account balances or the transactions of the goods receipt note, GRN. When a GRN is made, liability is created, correct? So that's an account balance. So that's a risk, area of risk, that there could be some, flaws there where the account balance is materially misstated. Now, while assessing the risk, auditor identified that controls are there whereby, inventory are physically recorded by somebody and into the system recorded by somebody else. So segregation of duty principle is there, which is an internal control. And it also, not only it identified such control, the auditor, but it also finds out through testing that yes, they are working continuously on a continuous basis during the audit period. So the auditor immediately finds out, can assess, evaluate that since this control is operating throughout the audit period, there is no risk of material misstatement arising out of this account balances. Am I able to make you understand? Please at least that much you say yes or no. It will be easier for me. Otherwise, I'll be hovering around it. Or else, if you understood, I'll move forward. Okay? Because these are fundamentals. And if such control is missing, then the auditor goes for test of detail. Okay? Auditor's responses to assessed risk. Okay? So what it is talking about? It is talking about the design and implement overall responses to assess the addressed risks of the material misstatement. So, the auditor has identified certain risks, and so we will see now. Any question? Let me see. Okay, no more no question, no problem. No question. Design and implement overall responses to address the assessed risk of material misstatement. So here, designing and implementing, not controls. Don't get confused, all right? We are not talking of designing and implementing controls. That is the responsibility of the management, not auditor's responsibility. Here we are designing and implementing how we will see that the assessed risk has been responded, okay, with the help of the internal controls. So we will find out. So how we will do that? That audit team should be quite skeptical about, their audit, and experienced team will be involved. You see, this is what we are designing. This is our design and implementation. That we should be careful about it. The risks we have already assessed, and it has been discussed with the audit team. The audit team is going with that in mind, and also have an audit plan in place. So we are going with that. That is the design, and we are using the good expert who can address these issues. That's what we are implementing. And our continuous monitoring and supervision should be there. That's the implementation we are talking about to address the risk. Okay, because we have to see whether the controls are in place. And of course, while evaluating whether the controls are working or not, we can change it depending upon the evaluation or the outcome of the result of the test of the controls. Next would be the design and perform. Design and perform further audit procedures whose nature, timing, and extent are based on or are responsive to the assessed risk of material misstatement at the assertion level. So we had done an initial one in A1 to A3. You know that we have used good team. We are going to use good team. We will have in place proper monitoring and supervision, audit supervision and monitoring on the team, and then we will actually see it is being done by the team. So how they are doing the work, how that will be reviewed. So the auditor's assessment of the identified risk at the assertion level provides a basis for consideration the appropriate audit approach. Okay, so what would be the approach? Only performing test of control may be good enough. Okay, as I said, that if we perceive that there are a lot of controls, only by testing the controls could be good enough. If the results are all positive and there is no room to judge that, that if such controls fail, it will give rise to material risk. If no such evaluation is done on the auditors, from the auditors, then the test of control is good enough. Okay. Otherwise, okay. And similarly, only substantive test will be required where no such controls there. Okay. Or otherwise, a combined approach should be there. That we will do some test of controls. We will also have some substantive procedures in place. Okay. And we have to decide on how do we do it. How will you do it? You remember? Observation, inquiry, reperformance. You remember how do we do some test of controls? Reperformance. An example I gave you, the interest calculation, depreciation calculation. You see, we are doing this now. So to give you an example to make it more clear, if you do a test of control or depreciation to see if it is as per schedule 2, you check on a sample basis, per type of assets, per type of property, plants and equipment. Okay, it could be plant, it could be other assets and things like that. Per line of type of asset, if you apply the rate, if you reperform the depreciation calculation on a sample basis, and then you see the result of your reperformance is matching with the with the auditees calculation, then you can be sure, you can take a decision that because it is being done by system automatically, the logic is applying for all plant, and equipment, property, plant and equipment. It is not only for your sample. In automation, that is the benefit. If the logic is working correctly for a sample, ideally, it should work for the entire population. So that is your judgment. That is, so if you only do the reperformance only one type of asset, that may not be a correct judgment. Okay, so that the extent of the test that you will be carrying out, that has to be decided by the team, by the senior of the audit team. So if the outcome is matching with the outcome of the auditee's balances, the auditor can decide, yes, test of control is good enough. We do not have to expand the audit procedure further. But on the contrary, if the auditor finds out that the data is not matching, the recalculation is not, the reperformance of calculation is not matching with the auditee's data, what he can immediately do, he can expand his audit sample. He should not immediately jump and come to the conclusion that, auditee's data is incorrect. We need to see whether we are correct, auditor is correct. So we expand our audit population. In spite of reapplying the reperformance on the expanded population, still we find that the result is not matching. Then we have to talk to the client and then decide on the further audit procedure. And you see, this is the reason why we have to reassess the risk and reassess the audit plan. I hope you are getting it. All right. So test of controls or test of details need to be decided, and and what type of testing we will do: inspection, observation, inquiry, confirmation from third party, right? This we do. Bank reconciliation, bank statement, the year end account balances. When the account balances of banks which you do audit, 100% audit, you remember we discussed 100% audit we'll do here, but we are doing it through the confirmation. We do not go into the detail. The balance is matching. All right. Bank balances, the debtors balances, they are matching. And if it is not matching, a reconciliation is there. We must look into the reconciliation. At times, we should do the reconciliation. We should not rely on the reconciliation which is provided by the management. Okay. We should do such reconciliation. So that to that extent, you see, we are going into the test of detail, substantive testing. So certain account balances are such that you cannot have a test of control. Have to do a test of substantive testing or test of details. Okay. And the timing is important, whether it will be done for a period. So judgmental sampling is not, good enough. It has to be very statistical sampling. Statistically, we have to check. That's why period to analytical procedure is done. From month of April, every month, what is the quantum of transaction? And based on that, one has to decide how much data will be taken as a sample and from which month. Maybe mix and match. So if it is seen, it is skewed up at a later point, or it is skewed during the period at the beginning of the year. So it has to be based on that. It could be averaged out. It could be, based on the data which is on a higher side. Things like that one has to take into consideration. All right. The quantum, the period when we should test, at the beginning of the period, interim period, or at the end of the period. Ideally, it should also be at the end of the period. If some interim period testing has happened, it doesn't mean that we should not do that. Okay. If any changes has happened, again, that testing should be done at the end of the period. And the rule of the thumb, probably we have somewhere in the auditing standard also, rule of thumb is that the test of control must be carried out by the auditor at least once in 3 years. Even if assuming there is no change. And so please, so rule of thumb as per auditing standard, the test of control must be carried out once in 3 years. Okay. Next is whether the risk assessment takes into account the relevant controls and can rely on the operating effectiveness of the controls in determining nature, timing, and extent of substantive procedures. Please remember, ASA continuously talks about the nature, timing, and extent of the audit substantive testing, because whatever test you carry out test of controls, that will decide whether further test we will do. What further test? Substantive test. Why we do further substantive test? If the test have failed. Keep this in mind. I'm hope you are not getting confused with the, continuous, mention of nature, timing and extent of substantive procedure. Because the control is failing, then we resort to substantive testing. And for substantive testing also, we need to decide at what point of time we should do the substantive testing, on what population we will do, and what type of substantive testing we will do. It will be a pure, only mere analytical procedure or detail, test of detail. Okay. Keeping in mind the completeness, all the assertions again. Test of controls, keep in mind the assertion of completeness and accuracy. How will you test? Let me give you some example. How by test of control one can assume. Let me ask you a question. Please post an answer. By test of control, how will you ensure, how an auditor can ensure the assertion of completeness, that all transactions pertaining to the period of audit have been considered, that all transactions not only have been taken into account, but they are accurately taken. How? So the assertion of completeness and accuracy has been addressed through the system, which is a control, control is there, and we tested the control, auditor tested the control. Can you give me an example of that? What kind of test, if we carry out, that will substantiate the fact that all data are recorded. Completeness control can be ensured, confirmed. Can you give me an example? Okay, let me expand it further. Cash vouchers or bank vouchers. Okay, so completeness of all cash vouchers and bank vouchers. It constitutes transactions and account balances, right? How would, by test of controls, an auditor will ensure or can confirm that completeness and accuracy is maintained throughout. Can you answer, please? Any one of you, can you answer? Test of control applied on cash transactions and bank transactions to identify if anything that all are complete and accurate. Yes. Yes, Aniruddha, yes. How is that possible? What do you mean, how is that possible? It is possible by going through the vouchers. Each can go to that extent that each and every 100% vouching you have to do. So there the materiality comes. Are you getting it, Anuruddha? That materiality is important. One cannot see 100% vouchers, right? So if you define that, okay, 1 lakh is the voucher, materiality you decided 1 lakh. So all transactions equal to and above 1 lakh should be taken into consideration for test of details. That's why the audit has to be done. So that's the substantive testing if internal control is not there. Okay? Or you don't do the audit. That's the two way. Only two ways available to an auditor. If he decides to do the audit, he has to check each and every voucher over and above the materiality that has been decided. Alright? That's the way it happens. Okay? Giving answer for my question, that but just by taking a dump of all the transactions that has happened. You remember we were discussing that vouchers will be auto numbered in a sequential auto number. So if transactions are sequentially auto numbered, and an auditor takes a dump of all the data, a particular transaction for a particular type of transactions, and if he finds that something is missing, some number is missing, gap is there, then he will be able to understand that something has been deleted or removed, intentionally or otherwise. That will not conform to completeness. So completeness is missing. You may ask me, but if missing, but he may not have recorded such transaction, that will be difficult to understand. So that inherent risk we always carry. You remember detection risk includes the inherent risk also. So that is an inherent nature. We cannot find out if somebody has put in a transaction in his drawer. How will he know? An auditor cannot find out. All right. But we have to ensure that it may not be of material nature by going through the analytical procedure, substantive testing. So if I find too much of variance between the balance, then we start inquiring and may find out that they have forgotten to put in some transactions, right? And accuracy similarly, if you identify the logic to ensure that transactions are accurate, we need to, as an auditor, we need to know the validations that have gone, what controls have been put in into the system. If you are satisfied with such controls and by observations or inquiry or some reperformance you can find out, then the auditor doesn't have to check anything else. Say, for example, I gave you the example of purchase authorization. If such purchase authorization, they say that if it is over 1 lakh, it has to be authorized by 2 persons, and you take a dump of all the purchase orders more equal to or above 1 lakh and see that, in the audit trail, 2 IDs are coming. 2 ID of 2 staffs who are, one is the purchase manager and one is the purchase DM. Why should you check anything else? No transaction needs to be checked for authorization, at least for that part of the assertion. You are 100% sure of that assertion that it is confirming. No transactions are invalid or unauthorized. Isn't it a great thing? All right, of test of control. So that should be taken into consideration. Yes. You can see the trail, the reconciliation. Yes, Anuruddha, you're right. Okay, that's what I was looking for. Good. All right. And so in case of substantive procedures will be resorted to where, the assessed risk of misstatement of the, occurrence of such assertion may be there. Risk is there. So substantive testing will be resorted to. So keep in mind, if the assessed risk is lower because of the internal control, and the auditor intends to base the substantive procedure on that low assessment, then the auditor should only perform the test of controls. Okay, so we do not have to perform the substantive testing. I mean, different language I'm using to say the same thing, so that, this kind of language, it comes in the MCQ question, you do not get confused. So, if the risk is low because of the high level of internal control and the auditor decides that our substantive testing will be low, in such a case, he must do a test of control so that he can rely and decide whether he can rely on those test of controls. And he should evaluate it, then decide. Okay, again, reassess that whether his initial judgment of not keeping the substantive testing at low is correct or not. Timing, I think I have explained several times. Okay. Higher the assessment of the risk, persuasive, detailed controls are important. Okay. Detailed controls are important, and only test of control may not be the solution. There we have to combine to get a better evaluation and comfort that yes, there is no risk of material misstatement. Okay. Substantive procedure alone cannot provide sufficient appropriate audit evidence at the assertion level. All right. How much you can test, how much one can test. So some control, unless and until that example which you have given a situation that there is no control. If such a situation is there, we have to have only a substantive. Otherwise, only substantive test is not adequate. All right. So, and again, how we do it, inquiry, observation, reperformance, and same way. We do the same way. Auditor shall obtain more persuasive audit evidence audit evidence, the greater the reliance of the auditor places on the effectiveness of control. Okay, that's why I said that micro level documentation is important. Please keep this in mind. These cannot be done in a persuasive manner. We cannot gather audit evidence in such detail unless and until our base work is done correctly. It has to be at a micro level. Then only we will be able to identify simple thing. We can draw a huge flow chart with detailed risk and controls of only credit controls. Various type of customers. There could be so many type of customers in an organization. I'm talking of large organization. Various type of customers are there. So customers needs to be bifurcated by, the way they do business with the company. All right. Some may be on advance. So there is no need for credit control check there. So this understanding has to be there. So there would be a set of customers who are working on, whose business relationship is based on the credit line. Now, do they have some security given for availing that credit line? In most of the cases, yes. They are not given, unsecured credit, right? Unsecured credit line is not provided. So what kind of, so there could be another set of customers who are given unsecured credit, right? So if it is a secured credit, what kinds of security? Simple thing I'll tell you. An example which many a times auditor doesn't review this. It is based on a guarantee, bank guarantee. Many auditors fail to see if the bank guarantee is live. Bank guarantee has expired and we still think that they have given a bank guarantee, but bank guarantee is not perpetual. It is for a period which needs to be renewed. So is there adequate MIS? Even companies doesn't know. The staffs are not aware. Okay. Forget the MIS, the senior member, they are not aware. They are thinking it's all secured. But the security has not reviewed from time to time, periodically. So these are the things are important. So the more we rely on the control, so the control is that because it is secured and so credit line is there, so you please sell on credit. But then you see that this recoverability, huge debtors balance is lying. So now when you go back and check, you see that bank guarantee has expired and you cannot invoke that bank guarantee. You just see where the management now stands. Okay, so this kind of detective problem is not good enough. We should have preventive control working, continuous, effective, and efficiently. So this has to be seen, and the more micro level we prepare the risk assessment and identify the control, our audit planning would be good. Now, do you appreciate? Now, if I make such a plan and give it to one of the staff that, these are these 100 customers are there to whom sales are made on the basis of a credit. They have a credit, they enjoy a credit line and it is secured. Security is based on it is a bank guarantee. So I give that plan to a student, maybe see please review that the bank guarantee is live and come and tell me whether some bank guarantees have expired. Maybe he will come back to me with a list of bank guarantees they have expired. What do? It goes to the main report if possible, depending upon the materiality. Now we have to again evaluate it with the balances, recovery, whether the debit balance is there. If there is no debit balance, good enough, but we must immediately tell them, you see, today the bank guarantee has expired. They do not have the bank, any debtors balance, so the risk is low. But tomorrow, collusion may happen. This is the way the fraud takes place, that you leave that low risk just like that, slip on that. One day you make an unusual transaction, a big transaction, and then there is no trace of that person. All right. So entire debtors would be unrecovered. Go to court, we will see. All right. Then you will see. But that recoverability will be absolutely doubtful. All right. So these kind of things one has to. So that's what I'm talking about. Persuasive, more detail of test of controls, and obtain of audit evidence about the operating effectiveness of the controls, including by whom it has been applied. Very important. The people, as I said in this case, the people who are supposed to execute this control on an ongoing basis? Is he doing it, or have I compromised it? That the purchase order has to be approved by two persons, the purchase GM and the purchase manager. Purchase GM said, "Arey, forget it. I give you my ID and the password. You do it." Is it like that? So the control is not operating in spite of the fact that the control has been implemented. It is not operating effectively and efficiently. And if auditor fails to detect it, it is their problem. All right. So the control, it is control risk and also a detection risk. That the control, in spite of putting it there, it is not working. Determine whether controls to be tested depend upon other controls, indirect controls. Indirect controls is the IT controls, example IT controls. And if so, whether it is necessary to obtain evidence that those are in operation continuously. Timing of test of controls and additional audit evidence. Okay. Using audit evidence obtained in previous audit, yes, we can take into consideration that also, as in case of the risk assessment. If there have been changes, that affect the continuing relevance of the audit evidence from the previous audit, auditor shall test that part of the control, current audit. If there have not been any changes, auditor should test, rule of thumb, as I said, yes, once in 3 years. And of course, we need to evaluate the effectiveness of the controls that we tested. Then only we can take a call that yes, the controls are there and we can move on with the rest of the audit. Cases where potential risk of material statement need to be addressed using substantive procedures, where the controls are failing. Two cases it can happen, where controls have failed. We evaluated that the controls have failed. There we have to resort to substantive testing, and another case where the controls were not there from the beginning. There we have to resort to substantive testing. Okay. Now we start talking about this, so that controls, test of controls we have seen. Now we are coming to the detail of substantive procedures. All right. Which could be, test of details like to the vouchers, the transactions, not only the vouchers, each and every underlying documents accompanying that transaction. Okay, purchase order, sales order, goods receipt note, just think of anything, any invoices, bills and things like that. And analytical procedure, external confirmation procedure, like say bank confirmation, third party confirmation like bank, debtors, creditors, and which is basically in A52, it is talking about responsive to significant risk. Timing, when do you do that? Do you do during the period, at the end, things like that? You have to do it during the period and also at the end for unusual transactions. Substantive testing doesn't mean that throughout the year we are testing and not during the last period. We are, many times it happens that audit last journal entries are done at so end of during the audit, they are not tested in detail. Okay. Only mere voucher is checked, but you have to see the, assumptions could be there, estimates were there. Those evidences are important, and in detail it has to be tested. Okay. Interim date, that's what we're saying, that during the interim period it could be tested, but it has to be carried forward up to the end of the closing period. That's very important. Cases where substantive procedures covering the remaining period need to be modified. All right, need to be modified based on the evaluation of our outcome from the substantive test which we carried out during the interim period. We might have to, what do you mean by modifying? We might have to increase the sample size. We might have to reduce the sample size. Both way. It can be both way. We are getting good confirmation that no, things are good. So we might rely on this and may reduce the sample cases, or otherwise. You might have to, if you are encountering too many errors, intentional or unintentional, and together it can be of material nature, you might have to increase the sample size. All right. Because your report would be based on your evaluation. So whether your report will be modified in terms of giving qualification or emphasis or a disclaimer or notifying it in internal financial control annexure, all depends, varies upon the materiality. So you have to, one has to increase it or decrease it depending upon the outcome. And adequacy, SA 330 also talks about the adequacy of the presentation and disclosure, sufficiency and appropriateness of audit evidences we must ensure, and documentation. Evidences must be stored and document. It could be an evidence from the system, whatever means. It doesn't have to be in hard copy. It doesn't have to be in hard copy because as per the Information Technology Act amended, soft copies of evidences are also presented in the court of law. But it is very important for an auditor to ensure that the evidences are stored properly. Okay, they should be stored properly. The more you digitize, the better it is from the, we have to maintain it for quite some time, say for 8 years, maybe we have to retain it, or if it is sub judice, we may have to retain it till the case is over. So you never know. So digitization is good. So we have to keep that into consideration. So that's about SA 330. Any question, if you have, you post it. If you do not have any question, you can come back and post it later also. I will answer it. Okay, I will answer it. Not to worry. But we move on with the rest part of the audit planning and execution. SA 600 talks about the use of other auditors' work in statutory audit. All right. So it is to establish standard to be applied in situations where the principal auditor, the main auditor, can use the work of other auditor with respect to the financial information of one or more of the components and included in the financial information at the entity. All right. Doesn't deal with. Please remember. So the first 1, 2, 3, it is what it deals with. And the second bullet, that it doesn't deal with, say, SA 600 doesn't deal with the those instances of joint audit. It doesn't deal with the joint auditor. Okay, it talks about the other auditor, where this auditor, the principal auditor, is not the auditor, or it is not a joint audit. Okay, it could be a separate branch audit, it could be a internal audit, or any other, expert. All right, so we are talking about that. So acceptance. In this case, it is very important for us to know. For SA 600 talks about whether the principal auditor is, is in a position, or he understands that he can accept the role of a principal auditor. That's very important. He should know his own limitation. He should know his own strength and weaknesses. That's important for an auditor to know. Okay, these are small auditing standards. You should go through it. Questions will come. That it is important for an auditor to know his limitation, capability. Okay, whether he should accept acceptance, as principal auditor, auditor's own participation, materiality of the in proportion to all these, like portion of the financial information, whether he is knowledgeable to that extent to give right kind of reporting, for right kind of reporting, and whether he is able to do the risk assessment properly, will be able to do it. These he should decide first and then take the audit. Okay, so then comes the principal auditor's procedure, roles and responsibilities. So it is governed by the statute. In most of the places, it is statute governs it, like statutory audit. Statutory audit is governed by, the company. It is either by the Companies Act, or it is by the, also along with SEBI, or the Banking Regulations Act, RBI. So we are governed by, various statutes, IRDA in case of an insurance company. So various rules and regulations and laws that are there in the, in the country. Okay, so we are governed by that, and a principal auditor must perform his responsibilities accordingly. Okay, and there should be adequate coordination. Adequate coordination should be there between the auditors. Like, I'm not talking of joint audit here. We will see. It could be internal auditor or some other auditor. So adequate coordination should be there with other auditor. All right. Reporting consideration should be there. Okay. I didn't go into the detail of the procedures. Again, the procedures are same that we discussed. So I skipped that. That's taken care of in the audit execution. So coordination between the auditors are important. Okay. And reporting considerations we have to take into, again, it is governed by the legal framework. All right. So it can be, and when we are talking of coordination, we can we can send them a letter and which can be responded to. We can talk to them, and but we cannot tell them to do any audit for us. All right, we cannot tell them that you do this part of the work for us. Okay, that we cannot do. All right, so it is the primary responsibility always lies with the principal auditor. Remember that, and we are not talking of the joint audit. For that, this is what you must remember for your exam. Okay, we are not talking of joint audit in SS 600. Okay, so reporting would be as per the requirement, and division of responsibility. Division of responsibility, that, I mean, suppose it's an internal audit. Internal auditor knows what they have to do. If it is an expert auditor on a particular area, he knows what he has to do. Ultimate, the responsibility lies with the principal auditor. It is his responsibility to use the work of the other auditors. I mean, he may choose not to use, but he should give he should review it. Otherwise, he is not doing the job correctly. His job he is not doing correctly. And it might give rise to a risk of material misstatement. All right. That he is not knowledgeable to that, extent for a particular area. That's why he's, the work of other auditor is being used. Suppose you see, fraud investigation is going on. If I can give you an example, investigation is going on. So a statutory auditor who is, he has to go through the report of the, fraud investigation. So he cannot just not look into it. Now, whether the comment which has been made by the fraud investigator, that should form part of his report or not, that is his judgment. That's a separate issue, but he should go through it, right? Now, suppose revaluation has happened. Okay, revaluation has happened. Impairment has happened. An impairment has happened, and so whether a plant has impaired or not, we are not the right person to judge. So a technical person has been used to identify what kind of impairment has happened, and to that extent an accounting entry, it has been, accounting entry has been passed. But we have to know whether it is correct or not. To know that, we have to go through that report and make our own judgment. All right. So to that extent, the audit report should be considered, but the final call is on the principal auditor. Okay. Now similarly, the internal auditor, the SA 610. Okay. Using the work, so specifically SA 610 talks about the use of the work of the internal auditor. So what it says, the external auditor's responsibility. Okay. Where the internal audit function is there. An internal audit function is there. Where, as you said, internal audit function is there, this question doesn't arise. Where the audit function is there, to determine whether he should rely, whether he should, the work of the internal audit function or the direct assistance from internal auditor can be used. All right. If using the work of the internal audit function to determine whether the work is adequate for the purpose of the audit, that he should determine. If using internal auditors to provide direct assistance to appropriately direct, supervise and review their work. All right. Whether that can be done. If legally, if it is prohibited, it cannot be done. So the legally it said that no, you cannot ask the internal auditor to do work on your behalf. In that such a case, it cannot be done. All right. And if it is not so, maybe it can be done. Okay. But generally, such things do not happen. All right. The objectives and scope of the internal audit functions. So, they also do the same thing as we have seen in case of a statutory audit. Like they will also look into the governance part of it, the control environment, how the risk assessment risk is managed. Yeah, here we are talking of risk management, which takes into consideration the assessment and the management. All right. Management is done through controls. Okay. Management is done through controls and activities to the specifically to the controls where they are evaluating the internal control relevant to the financial and operating information, review of the operating activities, review, and of course review with the compliance with laws and regulations. Okay. Some more detail of SA 610. If the work can be used to decide, the auditor is evaluating whether the work can be used, and it determines that whether the work of internal audit function can be used for the purpose of the audit by evaluating the following: the extent to which the internal audit function organizational status and relevant policies and procedures support the objectivity of the internal auditors. What do you mean by the objectivity? They are not biased. If you know that there is, because it is internal audit reports to whom? It is not to the external, stakeholders. Internal audit always report to the internal management. So there is, if the principal auditor or the statutory auditor has any skepticism, or they are skeptical about that fact that there is a possibility that the objectivity is lost because of the biasness, they may decide not to rely on their work. Okay, that's what we are meaning by this. That to the extent, the internal audit function, their organization, okay, how they have performed is and relevant policy and procedures support the objectivity of the internal auditors. They are not biased. So that is important to keep in mind. And the level of competence of internal audit function, yes, it is whether they are competent enough to do that kind of an audit. If they find and if they have any doubt about the competency, they may choose not to rely on such audit report, and whether they have applied a systematic and disciplined approach, including a quality control. In most of the large entities, you will find that if one large firm is doing the statutory audit, another large firm is doing an internal audit. All right, because of such reason, the third point, that they would ensure they would actually do a systematic and disciplined approach. Doesn't mean that it cannot be done by smaller firms or medium-sized firms. Yes, but thing is that the principal auditor's responsibility is to decide whether he can decide on such internal audit work. Again, on the same way that if it has been done by a big firm, doesn't mean they have done everything correct, and the principal auditor may choose not to rely on such, depending upon the first kind, whether that objectivity has not been made, that there could be some reason to believe that there has been biasness. All right. And second is that the external auditor shall not use the work of the So I mixed it. That if it is found that they are not biased, use it. If they are biased, don't use it. All right. If they are competent, use it. If they are not competent, don't use it. All right. If they are doing it systematically and disciplined way, do it. Accept it, or take into consideration for your own audit. If it is not, don't accept it. Okay. So keep this in mind. An internal auditor is also an independent function. Please remember, audit function is independent, whether it is internal or external. Even internal audit function is independent. But because they are reporting to the management, there is always the statutory auditor or the principal auditor, that in that matter should be a little skeptical about whether they could meet that objectivity. All right. And whether there is any bias or not. Sorry. The external auditor may be prohibited by law of regulation or any regulation from using the direct assistance from the internal auditors. And if not prohibited, evaluation of threats of objectivity and competence should be considered. That's what I said, that this is generally not done. rule of, you can do it. Theoretically, yes. If it is not legally prohibited, the direct assistance from the internal auditor can be taken, that you do this work. All right. But the principal auditor has to decide why you should do it, because he's not part of your internal audit. They are not part of your audit team. All right. That means you do not have the resource who are competent. So the, acceptance is a problem. Remember, the essay talks about the acceptance. Acceptance is becoming a problem. If you are not capable, why you are taking up the job? All right. So auditing standards talk about that. All right. So in spite of that, if some assistance is required, suppose it is in a remote location, in spite of having good audit team, quality team, everything, number of qualitatively, that's good enough, good, quantitative also is good enough. But in spite of that fact, it's, it's because of the location. Because of the location problem, it may be said, like now in the pandemic situation, we might take the help of the auditor who's there doing the work there, maybe an internal auditor. We may take the help of that auditor to, give us some assurance on a particular balance, say inventory lying there. So we do not know, we cannot do the physical verification of that. So we tell them, please do the physical verification for us and send us a report. We can do that, isn't it? Can we not do that? Yes. But before doing so, we must ensure that they will not be biased. It will be an unbiased one, and they are competent to do so. All right. So please keep that in mind. Don't keep any confusion on this, when we can take the help of the internal auditor for direct assistance. Direct assistance means that they will work as if for us, as if they are part of our team.
And yes, ma'am. In SA 610, using the work of internal audit function, it specifically guides you where you can use and how you can use. There are certain situations in which statutory auditor can use the work of internal audit, like yes, internal audit functions. Yes. So for that, SA 610, it is given in detail.
Yeah, that's what we are saying now. That's what we are talking about. So that's what we are saying, that it is, I'm discussing SA 610 only. So internal audit assistance can be taken. I gave you just an example. I gave you a practical example where it can be done. That internal audit is going on in a remote location where probably the statutory auditor cannot go. So he can tell them, that you please do it for us. So once you go through the SA 610 in detail, so you may get more examples. I just give you one of the examples. Okay. Is that all right, Karuna?
Yes, students. In fact, if you will refer chapter 2, in that we have also given a flow chart where external auditor can consider the work of internal auditor. Okay. And before using that they need to ensure certain criteria, and that is given in chapter and SA 610. And there are certain work which statutory auditor cannot use. They cannot take direct assistance of statutory auditor. So students, you need to go through SA 610 very carefully, because not only in this chapter, it is also part of internal audit, management and operational audit. So in that chapter also you will find the reference of the same.
Okay. Just let me take them through that. Okay. The revised one. Okay. Where they can take the direct assistance. Okay. Let me take them through that. Okay. Since direct assistance. Okay. So one is that if it is prohibited, okay, I'll come to this later. So if it is prohibited, they cannot do by law. Prohibited by law, they cannot do it. And where they cannot do it, if they have again some interest, biasness. If they have an internal audit has some, that's what I was talking to you. That if there is any reason to believe by the statutory auditor that that it is they can be biased. In such a case, they should not be used. Okay, that the entity, so they have some interest. They're talking of some interest they are having. In such a case, it should not be used. Okay, personal relationship, family relationship there with an individual working there. In such a case, it should not be. Those should be taken into consideration as an objectivity. What we are talking of objectivity, biasness comes from where? That their relationship is there. All right, interest is there. So if you are taking help from such a person, naturally there could be a reason to not believe what you are getting it. Okay, so that should be kept in mind. And yeah, so yeah, that's what. So these are the things which are there. Is nothing more than that written. Yeah, I went through this again. There is not nothing more than that what we discussed. Okay. Now coming to the using work of auditors, experts. Okay. Some more on this. This is 620. This is talking about the SA 620 talks about the 610 talks about internal auditors, and the work of other audit experts. SA 620 states. So what do you mean by that? So what is the auditor's expert? So we need to please look into this. An individual. So in this case, there are two aspects where the management is involved and where the auditor is involved. Now in the first one, auditor's expert. An individual or an organization possessing expertise in a field other than accounting or auditing. Please, that's why I've highlighted it. That here, an individual or a company or a firm, they are expert in a particular field which is not accounting or auditing, whose work in that field is used by the auditor to assess the audit in obtaining sufficient appropriate audit evidence relating to something. I gave you an example of that. The impairment of asset. They say that there has been an impairment of asset, but the auditor is doubtful about the value, by how much it has been impaired. So how do you know whether the value which is actually coming into the financial statement, for which the auditor is responsible for, and which has been decided based on the impairment carried out by an expert who's an engineering guy, maybe an engineering company. All right. So they had done that. So we will take into consideration their reporting. We can talk to them. All right. That's what we are talking about. The auditor's expert. They are actually helping us in deciding that whether this is good enough. The evidence that we are having, the data on which we are attesting is, reasonably good, and it will not give rise to any material risk or misstatement. All right. So that's the auditor's expert. Coming to the management's expert now, the second part of it, again, an individual or an organization who's having an expertise in a field other than accounting and auditing. Again, other than an accounting and auditing, whose work in that field is used by the management. Here it is not by the auditor, it is being used by the entity. Entity means the company. Company means the management of the company or the entity, to assist them, the entity, in preparing the financial statements. All right. The IT help. A simple example I can give you, the IT expertise. All right. The expertise of the IT who have implemented or has implemented and maintains the IT systems. They can be an expert, all right, who's actually assisting the entity in preparing the financial statements. Say, for example, they're using an ERP for all the processes. For the basic accounting is done there, but the consolidation, I'm talking of a large organization having many subsidiaries, associates and like that. A CFS is important. CFS does it now. All those subsidiaries and the associates, they may not necessarily they will have the same kind of in ERP. Some of them are using ERP. Somebody is using a Tally ERP. Some is using SAP. Some is using Oracle. How do you consolidate that at a CFS at the holding level? And the principal auditor is responsible for that. For that, probably another software is there where, the standalone financial statement from all the subsidiary associates come in, and then they are compiled in that particular software, separate software, standalone software to generate the CFS. So their help is taken by the management's end. So they are management's expert. So they are not accounting expert, they are not auditing expert and things like that, but they are expert in a field which is required by the management in generating or preparing the financial statements. Please keep this in mind. It is not a consultancy from a GST expert. It is not a consultancy from a Index expert we are talking. Other than that. All right. And similarly for the auditor also. Okay. Who's not an expert in auditing and accounting. If you are taking any help from them, okay, that's called an auditor's expert. And in case of a management, they are called the management's expert. Taken care of in SA 620. And
ma'am, we need to tell them that in SA 620 only we are talking about auditor's expert. If we are talking about management expert, then of course SA 500 audit evidence will be applicable, because
Yes.
using management experts work, that is audit evidence. So whenever in the question, if we are talking about management expert, students should be very careful and they need to apply SA 500. And in case if it is auditor's expert, they need to identify in the situation and refer the SA 620.
Okay, so keep that in mind. Madam supplemented very nicely that keep that in mind that audit evidence, we will have separate classes on essay. So we are not able to cover everything in the same, length and breadth of these. So it will be covered later on. So management's expert, it is taken care of again as an audit evidence, which will be covered in SA 500. And please remember, in 620, we are really talking about the auditor's expert. And here in 620, we are just giving the definition. Okay, but for 620 purpose, for your exam purpose, in this case, we are dealing with the auditor's expert. All right. So from the question point of view, please keep that in mind. And if anything is required, I have still some time. If you are not having any questions, I'll just go through to explain the 620 a little bit in more. Just some. I will not use the word again, nature and timing.
In fact, that is important word, nature, timing and extent. They need to take in consideration.
Yes. So otherwise, as I'm continuously talking of nature, timing and expertise, you see the nature, timing and the, the procedure which has to be adopted actually decides, we have to decide when this, expertise will be used, when the internal audit work is to be used so it all depends. So it varies from complex situations to situation, even in smaller cases it will apply. But nature, timing and extent are the fundamentals of audit. Nature, timing and the extent. How much audit you will do. Extent is again for the, probably for one more time. Extent is how much, nature is what kind of, and the timing is when. Timing is when you do the audit. Interim, end of the period, continuous. So those kind of things. Continuous, you can take the help of the MIS, you can take the help of the audit reports and things like internal auditors expertise or the other expertise, other audit expertise we can take at the end of the period. So guiding factor is the nature, timing and extent. Okay. So please remember, it is not absolutely mandatory for the auditor to, what should I say, to be in agreement. The principal auditor doesn't have to be in agreement with the auditor's expert. All right. So but if he has that kind of proficiency, I mean, that's the reason why he is relying on somebody else. But now the question is here, whether if some negative feedback he is getting from that auditor's expert, how he should address that in his auditor's report. Finally, all these terminates into the auditor's report. That's the fact. That's what you must remember. So,
yes, in fact, if auditor, in case of unmodified opinion, auditor
yes,
need not to refer the expert's opinion in that. And in case,
in,
if they refer to, then also responsibility of auditor will remain
yes,
final.
yes. So it is the
Auditor will,
principal, yes, it is the principal auditors. So they don't have to agree completely, but again, because they are not the expert in that field, they should rely to the extent they believe it is correct, and it is their judgment how to report that. Whether it will be in the normal way as a loss of internal, lack of internal control, that because the risk they perceive or the risk they assess is low, or they feel no, it is of very major risk and they should qualify their modify their report through a qualification, or they emphasize it. It is absolutely the call of the principal auditor. So for audit purpose, I mean for the exam purpose, please remember, my dear students, that it is the principal auditor's responsibility to deal with it. They can take the help of the internal auditors, they can take the help of the auditor's experts, they can take the help of other reports and things like that, external or internal, but the responsibility remains with them how to express it in the audit report. Okay?
yes, that is the reason that auditor need to ensure that expert has done the work very correctly. He need to ensure and he need to check that whether nature of the matter to which that expert's work relate, risk of material misstatement. He need to ensure how he's working, what is his experience, what is his expertise. So generally in the question it is asked in your final examination, and you need to mention that yes, the expert is competent, capable, and fulfilling the objectivity and other relevant matter also he need to take care. And further, whatever is outcome of his report, they need to evaluate the significance of the same and how they have ensured. One more thing, SA 620 covers is agreement with the auditor's expert. The auditor shall agree in writing, when appropriate, on certain matters with the auditor's expert. It is very important because in scenario-based question, there might be a situation where it is asked, yes, auditor has not done written agreement, or they have not done any agreement. Whether when auditor is using the expert's work, is it in compliance with SA 620? No. Auditor has to be in agreement with the auditor's expert, and they need to cover certain matters like nature, scope, and objective of that expert work, how and what work he will be doing, respective role and responsibility of auditor and that expert, nature, timing, and extent, which ma'am has already, I think, very nicely explained. So, of communication between the auditor and the expert, right? How they will be reporting, how they will provide the report, need for the auditor's expert to observe confidentiality requirement, because confidentiality is also must. And after this agreement, when expert is pursuing the work, auditor should evaluate the advocacy of the auditor's expert's work. He need to ensure that yes, whatever work has been done by the expert is advocate.
Yes, absolutely. So you please remember this part I didn't mention, that there has to be a written, understanding between the auditor's expert and the the principal auditor, and he will be using the same kind of approach which he applies for himself, for his own team. That they are qualified, they are competent, and they have the requisite knowledge and experience, and then only he can actually rely on their work. All right, so that's more or less about 620. And last, I'm not going to deal with in detail
I think we don't have time to cover essay 540.
I actually planned it like this.
No. I think time is already 2 o'clock.
So you see, auditing accounting estimates, which is
so I think you just differentiate them about 600, 610 and 620.
Yes. Okay. Fine.
And then we'll wind up.
Okay. So 540 will be taken up, later on. So 315, 330 we discussed, the risk assessment and how are they addressed in 330. In 315 we do the risk assessment, the auditor. In 330 basically the risk, how the risk will be addressed by the auditor. Here how the risk will be addressed by the auditor is discussed. And about the 600, it is basically the other auditors' work. The other auditors' work in general. It will be taken into consideration, as he said, the management auditor and things like that. And 610, we are talking about the internal audit, and 620, we are talking about the auditor's expert, which is not internal audit, but an expert. It depends on various complex natures. Like I can give you a small example where we had taken auditor's expert, the boiler. We do not know whether the boiler, in a particular, factory, they are showing it that it is obsolete. Now a boiler becoming obsolete is a huge thing. So we had to resort to this auditor's expert that you please tell us independently whether that boiler is really should be written off, because it cannot happen overnight that the boiler is not is going out of order completely in spite of taking all the preventive measures and things like that. So we had to resort to an auditor's expert and then take a decision, because you see how you have to remember the financial impact. You may think that what is the financial impact of it? The financial impact is that if a boiler is getting replaced, just imagine the cost. That the cost has not been there. The cost has not been built in. That they do not have that capital budget. All right. So those sort of things are also need to take into consideration. And today, suddenly there is a huge capital cost, implementation cost, and not only the cost, if also there is the production stopped. The production stopped and there is a loss of production, which has a cascading effect on the business in terms of the revenue and the expenditure. Expenditure is going on, but the revenue is not there. All right. So those kind of things one has to keep in mind when the auditor's expert opinion is actually sought by an auditor, but it is the responsibility of the principal auditor. Undoubtedly, internal audit, keep in mind where it can be directly, internal auditor, they can directly assist a statutory auditor, but before doing so, an internal auditor, statutory auditor, principal auditor must take into consideration all the, the reasonable approach, that they are qualified, they have enough manpower, they have the knowledge, and they are unbiased. They are unbiased. By now, I'm sure over the last 15-20 days that we are speaking, and even before that through other classes, what is how the biasness can come through through relationship, through interest and things like that. All right. So keep that in mind, my dear students. And 600 also talks about the other auditors' work that can be considered by the by the principal auditor through proper coordination, responsibility, division of responsibility should be there. And if you have any question, I didn't get much questions today. Doesn't matter. Probably you are all very tired attending from morning. So if you have, you go through this and you will have more classes on auditing standards. So you can always ask questions and they will be all answered. Not to worry, they will be all answered. For today, I have answered whatever little bit questions you have given. If you have, you can give it to me. Otherwise, we'll wind up for the day. Thank you very much. Have a good day, please. So we can, Runa?
Yes, ma'am. Thank you very, very much.
Thank you very much.
So students, I think ma'am has explained you very nicely essay 315, 330 in depth. So you need to go through the essay once so that you will be able to understand what are the requirements in essay 315, because that is very important risk assessment part. So you need to go through the standard very carefully and please prepare a chart where you can cover essay 600 series using the work of others, that is essay 600, 610 and 620. And then you may, if you have any doubt or query, you may come back to us.
Absolutely, absolutely.
Yes. Thank you, ma'am. Yeah.
Thank you very much. Okay, bye.